So reputationally, we've done well from an AI point of view, and our Monks Flow product, which is product suites in a number of areas, visualization and copywriting, hyper personalization at scale, media planning, buying, general efficiency, and democratizing knowledge. Those are five areas of AI where we're heavily focused on improving efficiency and effectiveness.
Hello, you're watching Proactive. Joining me is S4 Capital founder and executive chairman, Sir Martin Sorrell. Sir Martin, thanks for taking the time to speak with us today. You're on with a fourth quarter trading update last week, and it appears that there's a plateauing, if not an improvement, in the tough conditions of the past couple of years.
Yes, I think Q4 was a little bit stronger relatively. We had a sequential improvement, both top and bottom line. We maintained our forecasts, which were made in November. We did have a couple of forecasts the previous year in 24, which we didn't maintain, but we maintained our forecast. We had improved liquidity, certainly significantly better than market expectations. That's still an area of opportunity for us, I think, both currently and in the future. And then last but not least, we talked about 25 being the same as 24. I think probably that disappointed a little bit, but I think we're being cautious because our forecasting has not been of the best quality, and we've got to make sure that we make our forecast. So we took a conservative view, and we'll explain more about that when we announce our results on March the 24th in full, and we'll lay that out.
So, Martin, what industry signs other than sales are you monitoring to look at industry conditions and forecast for the future?
Well, about half of our revenue base, which is about £750 million, that's net revenues. So you can call that about $850, and then it's about $1 billion gross revenue. About half of that revenue base is around tech companies, and those tech companies have been investing very heavily in capital expenditure around AI. Obviously, DeepSeek raises some issues as to whether that's necessarily the best thing to do. But having said that, what we are seeing is those companies continue. So Amazon's probably spending about $100 billion a year. Google around $60 billion a year, $15 billion a quarter. Meta, I think, actually up their capex on AI to capacity and energy surrounding it to about the same amount, having been around 45 billion. I think the Mag 7 are investing about $500 billion in total in capex to build out AI capacity. So that raises the question as to whether they're moving money from OPEX, spending on marketing and other things, to CAPEX. And that's what we've seen. Maybe that trend is arresting a little bit and it's becoming more stable. And maybe that will have an advantage for us. But, you know, with the KPIs that we look at are obviously top line growth, margins. We're very focused on improving our processes around pricing and billability and utilization, and improving our liquidity. I mean, our liquidity, as I touched on before, is now about 1.6 times EBITDA. Our range for liquidity was 1.4 to 2 times, so we're at the south end of that range. And as we have no merger payments now, we have no combination payments to make, that's all finished. Obviously, we can utilize the liquidity for buybacks and dividends in good order, and reducing liquidity. So I think we have a good shot at improving the liquidity even further. So top line growth, margins, and liquidity are the three areas for focus.
Do you see any of the other headwinds abating that have been hurting the sector? So we have interest rates starting to decline, although that could all change, I suppose.
I think, you know, growth is more muted than it has been, but, you know, worldwide growth would be about 3%. There are parts of the world that are going to grow faster than others: North and South America, Middle East, and Asia. And question mark over China. If you're big in China, do you really want to be bigger given the Taiwan risk? But areas such as India, countries as India, Indonesia, Vietnam, Thailand, Philippines, Singapore, Malaysia, all these countries are coming into more prominence. I left out Africa, which tends to be a little bit volatile, more conflicts in Africa than we've had for many a year. And then Europe obviously is under pressure. So the other feature, apart from geographical selection, which I think is really important in a lower growth, stickier inflation, higher interest rate world than we've been used to, the other thing is efficiency and effectiveness in Europe and elsewhere using AI, quantum computing, metaverse, and other technologies to improve the quality and efficiency of what people are doing. So those are the ways that we're reacting to the world. But, as I sit here now, we're dealing with the first set of tariffs that President Trump has introduced: China 10%, Mexico and Canada 25%. And obviously that makes the world more volatile. So agility is particularly important in an environment like that.
You talked about AI. How is S4 capitalizing on its own AI capability?
Well, is the answer, because Monks, which is our operating brand, was voted AI Agency of the Year by Adweek, and also what's really interesting, we've added to that with some business intelligence awards as well. So reputationally, we've done well from an AI point of view, and our Monks Flow product, which is product suites in a number of areas: visualization and copywriting, hyper personalization at scale, media planning, buying, general efficiency, and democratizing knowledge. Those are 5 areas of AI where we're heavily focused on improving efficiency and effectiveness using AI incrementally and fundamentally. I mean, our account win at General Motors is a good example of that. General Motors is one of the few, if only, companies that are taking a radical look at the way they market, taking into account technology and AI itself.
Any new opportunities you've identified in the market that you can target in 2025?
Well, I mentioned the areas of AI. All of those 5 areas are hugely impactful on our clients and the agency business. I mean, they're in different stages of formulation. I think copywriting and visualization, time to market is being reduced. That's a two-edged sword for agencies, because they charge partly on the basis of time. But essentially, we see big opportunities for us to improve efficiency, effectiveness in producing advertising. Hyper-personalization, cost per asset going down, but number of assets used going up at a rate, therefore total revenues rising. And in those first 2 areas, we're starting to charge on the basis of assets used rather than just time or retainers, or FTEs. So big opportunities for us to do things in a different way. Media planning and buying, big opportunity for us because we're a disruptor in that area. I don't think the big agencies, the 6 holding companies, will be employing 200,000 or whatever it is people in media planning and buying in the future. Clients will not rely on a 25-year-old media planner and buyer. They'll rely on an algorithm, which is similar to the investment business. I mean, media planning and buying is really media investment management. That's what Erwin Goldberg used to call it when he was running Group M at WPP. And I think he's dead right. There's no reason why clients who are spending $1 trillion a year, 300 billion traditionally and 700 billion digital, shouldn't work out what is the best way of investing that $1 trillion using algorithms which will give better output for that 25-year-old media planner and buyer to come up with better decisions on planning and buying. General efficiency, really interesting opportunities there, like our joint venture with NVIDIA, with AWS, and with Adobe on reducing the cost of outside broadcasting by something like 80 to 90%. And then finally, democratizing knowledge across companies. It's no accident that Jensen Huang has 51 direct reports and doesn't have many, apparently, one-to-one meetings, but relies on setting KPIs for people and trying to figure out where the best way to evaluate progress. And I think what you're seeing with AI is a flattening of organizations and companies becoming much more adept at sharing knowledge within their organizations because knowledge is being spread around.
Well, Sir Martin, I hope you'll keep us abreast of more developments at the company. We'll watch out for those results when they're released next month. Thank you very much for your time today.
Thank you. Apologies for my cold.
No, not at all. Thank you for taking the time.
Thank you.
Sir Martin Sorrell, the founder and executive chairman of S4 Capital.